Hello, everybody. Thank you for joining us today. My name is Andrew Dix, and I am the publisher of Crowdfunding Insider. And we are a digital news platform that covers all aspects of fintech, including online capital formation or securities crowdfunding. Today, we're going to have our experts once again discuss a very important topic, more specifically for issuers. And this is key considerations when doing an online funding round. And we're going to start the conversation off about broker dealers and funding portals. As some of you may know, in 2012, the Jobs Act was signed into law during a unique time of bipartisan legislation. This is during the Obama administration. And under that law, a new entity was created called the funding portal. This is a new platform. I kind of describe it as a broker-dealer light that was allowed to raise capital for regulation crowdfunding. At the same time, broker-dealers are allowed to raise capital online for private issuers under Reg CF as well, also including Reg A plus and Reg D. In recent years, we've kind of seen a bit of a shift where more broker dealers are becoming active in this space, and some platforms are actually operating both a funding portal and a broker dealer. So we have, once again, three of the largest platforms in the space with us today, and I'm going to ask each of them to do a quick introduction of who they are and what their platform does before we jump into questions. I'm going to start at top there with you, Etan. Who are you?
So Etan Butler here. I'm the founding chairman at Dalmore Group. Dalmore is a FINRA and SEC registered broker dealer headquartered in New York, founded in 2005, and we specialize in helping companies raise capital primarily online at scale through regulation D, A, and CF, and we're also focused on providing technology to facilitate online capital raise for issuers.
Thank you, Etan. Matt?
Hi, everyone. Matt Goldstein. I'm one of the founders of the DealMaker group of companies. DealMaker is first and foremost a technology solutions company that services issuers who are raising capital. We specialize in something called the self-hosted capital raise, where the technology provided by DealMaker sets the issuer up to present their own brand to the general public, and all of the soup to nuts functionality required for an issuer to run a campaign aimed at the general public is provided by the DealMaker technology and team. We own a broker dealer, a transfer agent, a full stack marketing agency as well. Myself, I'm a capital markets professional my entire life. I started as a capital markets lawyer in New York in 2012 when the Jobs Act was passed. I was still practicing and coming to the capital markets from the perspective of a transaction advisor, trying to solve problems so that people and companies can transact effectively, seamlessly, frictionless online.
Awesome. Thank you very much. Howard, you're next.
Hey, thank you, Andrew. I'm Howard Marks. I'm the CEO of StartEngine. Our mission is to help entrepreneurs achieve their dreams. We also have a broker-dealer, a funding portal, a transfer agent, and an ATS, which is an alternative trading system to exchanges. We have about 1 million users. We're about to augment it to 1.7 million with our Seed Invest acquisition. We're waiting for regulatory approval on that. And really our goal really is to help these entrepreneurs who come on our platform raise the capital they need using regulation crowdfunding or regulation A. We have client marketing group. We also have a lot of different professionals to help these entrepreneurs.
Awesome. Thank you very much, Howard. So once again, I'd like to mention that we have some of the largest platforms operating in the space in the United States, regardless of how you measure it today. So we're really fortunate to have these experts here, these founders, these executives to share their experience. So when I first started to get into the sector and try and figure everything out, I was a little bit confused as to why we needed a portal, what a portal was, why Congress decided to create it. So I'm going to start with you, Howard, because you operate a funding portal as well as a broker dealer, and you're kind of an OG because I think you launched your platform. Was it in 2016 or before 2016? About the time that you were actually allowed to raise money under the exemption. So when you offer securities as a funding portal, what service do you provide? What are the benefits of using this type of vehicle, Howard?
Yeah, so it's true. We launched June 2015 the Regulation A and Regulation Crowdfunding on May 2016. So we've been there since day one. And the benefits really is our expertise. We've done 700 deals, raised over $800 million in capital for companies. So we have a lot of expertise there. We have a pretty good community of investors, as I mentioned previously. And so for issuers looking for capital, we can offer them a solution where they can start with regulation crowdfunding and hopefully raise several $million. Typically, what we see that half of the capital comes through the efforts of the entrepreneur and the other half comes from our community. So there's some leverage there, opportunity for entrepreneurs. And then if they so choose, they can raise more money using Regulation A, and that's through our broker-dealer. And then, the limit is up to 75 million, but in reality, most companies raise 5 to 10 or 20 million using Regulation A if they're successful. The idea for us was to create first a community, a platform, a place where people can go invest and then track their investments. We have StartEngine accounts, which is we're allowed to carry cash and securities on behalf of the investor. So we can have one place where they have all of their investments, their cash, and they can deploy it and trade those securities down the road if they want to exit.
Okay, so let me back up a second here. Why would I want to use a funding portal? Why would I come to Howard and say, I want to raise money on your funding portal, not your broker dealer, but what
Right.
compelling reason I have for using StartEngine funding portal?
So Congress created this funding portal concept as a light broker dealer. I know it's not a broker dealer, I get it, but it's light, meaning a company who comes to a funding portal, the amount of due diligence we are required to do is less than for a broker dealer. For example, we can rely on the statements that the CEO makes. And the CEO still has to make statements that are true and valid, but we can rely on them as opposed to having a third-party due diligence on their technology, their patents, their everything. You still have to check, but it's different when you can rely on someone. There's a liability difference, and I think a cost difference. The funding portal is a light touch cost. The broker-dealer is a higher cost. That I think is true. So why the funding portal versus the broker-dealer? I think they wanted to allow companies like ourselves when we in the early stages to enter the financial market without a very large commitment as it would be for a broker-dealer. And that was the idea. And you can see there are over 20 funding portals out there in the marketplace. And that was the idea. Now, does it make sense to have both at the same time like we do? Well, we've divided it up the world in two. Regulation crowdfunding, which is up to $5 million raise using the funding portal.
Okay.
And then Regulation A.
Okay, so we're going to get back to that, but I want to jump over to Etan. And Matt, I'm going to start with you, Etan. I know you're not a funding portal. You're a broker-dealer. You've been a broker-dealer for a long time. Everybody knows you. You're neck deep in this, and so you watch everything and know everything that's going on. If I came to you, Etan, I say, should I use a funding portal? What would you explain to me as reasons why I should use a funding portal?
One reason might be for one of the reasons Howard mentioned, that some of the funding portals have been able to successfully amass a large number of users. And at least psychologically, that's perhaps more advantageous than an issuer considering launching an offering on their own domain where they would, in essence, be an island on their own. So that's one of the reasons I think to consider, using a portal, because you get to benefit, you have the chance to benefit from their community. That's one of the pros of I think using a portal. I think one of the downsides might be or one of the pros of launching an offering on your own domain, right, rather than a funding portal, is that it's your website. You have full control over the analytics and the investor journey, the funnel management, page tagging and inserting pixels. So you could really accurately determine the return on advertising spend in a very clear and direct way. And you could position yourself to be the sole beneficiary of your own marketing and promotional efforts, your own conversion of your customers, followers, fans, and subscribers directly to your own offering page. That would be the other end.
So are you saying that an issuer using Reg CF can launch that offering on their own domain, or are you talking about other exemptions?
An issuer, our model enables issuers to launch a CF offering on their own separate domain. Now, the broker-dealer, it's nuanced. The broker-dealer needs to control that landing page, right? So we need to make sure there's the right disclaimers and disclosures, and we have full control over all the materials that are on it. So it's not like they could just use their own website and put a invest button on it. It's a coordinated effort that has to be done in conjunction with and through the broker-dealer in this case. But the net result is, and from an investor experience, is you're seeing a issuer's page, the issuer's branding. So you feel like you're in the issuer's environment more so than a third-party platform.
But a funding portal couldn't do that. You have to be a broker-dealer to do that. Correct?
I believe that's the case.
Okay, all right. Matt, I'm going to give you a chance to jump in here. Again, I know you're a broker-dealer. You guys have all sorts of cool tech that you leverage. You're not a funding portal, but you're an expert in the space. Why would you tell somebody, go use a funding portal? Or what are the benefits to using a funding portal?
So can you hear me okay?
Yeah.
I just came off mute. Yeah. So when you pose the question and you say, I, Andrew, would ask you, should I go on a funding portal? Like, I need to know more about you. You got to tell me about some of your attributes. Funding portals are going to be certain funding portals are going to be the right choice, right? You're talking about what environment do you want to, sell your securities. So the art of sales is figuring out, who your customer is, right? You want to go to where you think your end customer is going to be. Howard runs a portal that has a community, I'm sure, and Howard can say more about the characteristics of some of those investors. What are they looking for? What's done well in that space? What is likely to appear, within the same investment thesis that somebody might be already, successfully pursuing in that space? And if you have the attributes that match what that audience is looking for, go and sell there, right? Like, that's how I think of it, right? The world of online investing is very similar to the world of online anything. Sales is just sales. And whether you're selling shoes or shares, you have to think about who your buyer is and how you want to reach them. Does that make sense?
Yeah, it makes sense. So Matt mentioned you, Howard, and you have this audience, and I think it's about a million registered users. I don't know if they're active investors, registered users, but that's, I think, 1 million eyeballs that you can put in front of a securities offering. I'm sure you have all sorts of cool data on that. Is that effective for an issuer who wants to use your funding portal?
Well, I think it's effective if you look at our financial performance, which is pretty well tracked with King's Crowd. They look at how much we raise every week on regulation crowdfunding on our portal, and they report on it, and it's pretty good. So it actually is working well, but it's not for everybody. I think Matt said it, and Etan was correct. Look, some people want to have more of the control on their website. And so we recently launched a button as well so that we can give our customers that ability to do that. With regulation crowdfunding is a little tricky because the regulation initially was for funding portals, and they were very clear that the investing has to be done on the portal. However, as broker-dealers have more flexibility and they're able to do more things, there's a bridge. And it has to be done correctly per the rule, and there are a lot of lawyers who have different opinions, and you have to just do what you think is right. Andrew, you have to understand, we're supervised by FINRA, and that's very important. FINRA is our regulator, and they are very, very, they have heightened alert on what we do. Why? We're not a crypto, we don't do crypto, but equity crowdfunding is still viewed as an area where they need to put a lot of effort and supervision, and we know they do, and that's great. We think that's a good thing for the industry, but that also means that we have to be very tight in how we do things.
Right.
And so I think all three here know what we need to do, and we spend a lot of money on lawyers, and we try to do the right thing.
Yeah, look,
But ultimately, it has been successful.
yeah, lawyers always get you coming and going. Isn't that right, Matt? I'm gonna jump back to you, Matt. So you operate as a broker dealer, and there are different services you can offer as a broker dealer, and we've kind of touched on some of them. As a broker dealer, you can issue securities under Reg CF, Reg A+, Reg D, Reg S, whatever. If Andrew, I come to you and I say, hey, I want to raise money online, and you say, well, I need to know more about you, and I start by telling you, first of all, that I'm kind of difficult to work with. But then I say that, I want to raise, up to five.
Go to Howard.
I want to raise up to $5 million. Would you say I should use a broker dealer, your platform, to raise that funding?
I don't think the question is whether you should use a broker dealer, if you don't mind my saying. So the question is, what is the best strategy for you?
Okay.
You know who your buyer is likely to be. You know what your value prop is, right? You know what your best way to reach them is going to be. Do you have a well-known product? Do you have an influencer supporting you? Do you have a community that's following you on Instagram, that's on a mailing list that you're managing? I mean, if you're talking about Crowdfunding Insider, you probably, like you, Andrew, have all of these things, in which case I would say you might be a strong candidate for a self-hosted raise. You might consider being on a portal for a Reg CF, or you might consider not being on a portal, but standing up your own Invest Now self-hosted capital raise, which any of the panelists can support. But to me, that's the question. And if you're going to stand up your own capital raise aimed at your own community and bringing people into your funnel, right, that's unique to you, well, are you going to do it under Reg CF, or are you going to do it under Reg A? Are you going to do it under Reg D? These are structuring questions. It depends how much you want to raise and who you want to raise from. If most of your community is accredited, you don't need to do a Reg CF. You can do a 506C. You can market to the general public online. You can accept investment with no limits on the individual investment amounts, as long as you verify that everybody's accredited. So you're going to know, based on the attributes you've identified as being the most important determinants of who your buyer is, how you should proceed with an offering. Is that helpful?
Yes. Etan, why should I use a broker dealer? What services additionally can a broker dealer offer to an issuer?
Well, if you are launching a Reg CF, you need to use a broker dealer or a funding portal, right? You can't do it without one. If you're launching a Reg A, you don't need a broker dealer. Many issuers choose to use a broker dealer for a Reg A to more efficiently position themselves to raise capital legally in all 50 states. And the same with Reg D. Reg D, you don't need a broker dealer unless the broker dealer is raising you capital from their network, or unless you might want to have some of your salespeople registered with that broker dealer to allow for you as an issuer to pay them commissions, right? So there's a number of different reasons. It comes back to the really, like Matt was saying, it's really the strategy of the issuer. But the primary reason why to use a broker dealer in all cases is the broker dealer serves as a regulated entity that performs due diligence, that makes sure that that the investments are suitable for investors that participate in them, and hopefully could give additional value add beyond that.
So, as a broker dealer, can you provide advice to investors? Can you provide marketing services?
Yeah. Yes.
Share. What about shareholder management? are these, how does that work at
Yeah.
Dalmore?
So yeah, you can provide investment advice, which we don't do for Reg A and Reg CF. A broker dealer is able to solicit, right? Whereas a crowdfunding portal is not able to solicit, right? They're just able to list the issuers.
Can you explain that? Explain that a little bit, because there's some nuance there that I think people should know.
So if you're listed, if you're looking to raise up to 5 million through a regulation CF and you're listed on a funding portal, that funding portal is not able to go and solicit investors for you, right? You could go and you could market and promote the offering, but the platform itself isn't able to solicit investors directly for you, like investment banking functions, or putting together a syndicate of other broker dealers to kind of co-list the offering, to syndicate it out to their networks. You're limited if you're listed on a funding portal, whereas a broker dealer is able to take advantage of more of these different mechanisms to kind of help assure a more successful raise beyond just being listed and marketed on a funding portal.
Matt, you guys provide marketing, you provide advice. What other type of services do you provide as a broker dealer?
Yeah, so the DealMaker group of companies tries to provide, you can hear me okay?
Yes.
Yeah. Tries to provide everything that an issuer would need to be successful. Our model is all about setting up the issuer for success so that they can find the type of buyers that are right for their securities. So as a broker dealer, we don't do any soliciting. As a broker dealer, we don't do any marketing. As a broker dealer, the only thing we do is two things. One, provide services to the issuer so that they can market their own securities in all 50 states, right? Under Reg A, under Reg CF, we would act as the regulated intermediary, hosting or back-ending that Invest Now page. So we unlock the ability for them to sell in every state, because otherwise under Tier 2 Reg A, an issuer would have to go state by state. And then the second thing we try to do is link up with other broker dealers, like my other panelists in this webinar, so that we can build communities together. We can take an issuer who's bringing in capital from their own community, marry that with another broker dealer or another group who also has the ability to bring in capital either from their community or, as Etan was saying, by soliciting, by making sales. And that way an issuer can try to reach the lofty heights that are contemplated by the Reg A limits of 75 million. Like Howard said, most people are in the 2 to 20 million range, but we think by working together with other groups, you can achieve that maximum opportunity.
What about offering documents? What about auditing, accountants, attorneys? Do you have relationships with people that can assist with this?
We do. I'm sure both Etan and Howard do as well. But we try to offer as easy and as kind of one-stop shop as possible for an issuer. So if they're coming to us and they're specialists in building a product or in offering a service or in developing technology, we want to let them focus on that and leave all of the nuances in and around assembling a team for a capital raise to us. I mean, they pay for it, right? So it's a use what you, pay for what you use kind of consumption type of system.
Cafeteria.
If you need marketing services, we have them. Yeah, if you need marketing services, we have them. If you need a lawyer, we have one in our ecosystem. If you need an auditor, we have one in our ecosystem. If you need, collateral to be made, if you need a website to be built, we try to be a one-stop shop.
Okay.
You can have everything you need to run a successful race.
Howard, what do you guys offer as StartEngine, as a funding portal and as a broker dealer? Do you provide, perhaps there are optional services for documents, auditing, marketing? What type of, what's your stack of services you offer to an issuer?
So we do offer all of the above because some of it is necessary. The attorney, the accountant. A lot of the times our issuers or the companies who want to raise money with us don't have the right relationships in terms of a cost-effective and expertise. So we have to refer them to other professionals, and we do that, and they can pick who they want. And in terms of the marketing, we have a client marketing group internal to our company who can also provide additional services should the issuer need them or warrants them. Again, at the end of the day, the success of an offering has to do, in our opinion, with the CEO of the company, their ability to execute the program, to be very involved and time consuming, be involved in the offering and be relentless and focused and calling everybody and doing marketing. All of the above is so critical for a CEO. I mean, you could say that the CEO who wants to raise money through a venture capital round has to do the same thing. They have to spend hundreds of hours meeting with venture capitalists and pitching. Well, this is no different. They have to be extremely focused on this campaign in order to be successful. And so we give them the tools, we provide them with the services, and hopefully it works. In many cases it does. It's a success, and sometimes it's not, and it's kind of sad, but that's the way things are,
Well, yeah, I think that's to be expected. So Howard, I come to you and I say, I have this great idea. I have this startup or early stage company and I want to raise $20 million. Not you, but somebody from your team is going to sit down with me and say, this is a great idea. What do you need? Do you need, help with offering documents, auditing, marketing? And I say, yes, no. And then I would work with you to put together a package for the offering, including the offering page, which you guys probably put together a lot of it. And then I go. Is that correct? Do I have that right?
Yeah. And then down the road, that is correct, Andrew. But down the road, we would like to simplify this because, frankly, it's really hard. It's difficult. A lot of the issuers who come in, they're not experts in legal or accounting or crowdfunding. They know their craft, and they probably do a great job. And that's our expertise, our area of interest. And so we'd like to simplify it. I think it's possible. It's just going to take some time and effort and make it easier for issuers. Ultimately, it comes down to the CEO of the company. They have to be focused. If they're not, there's not much we can do.
Okay. So, Etan, again, I come to you, and I've already spoken to Howard, Matt, and I say, Etan, can you provide these services for me or point me in the right direction, including offering documents, auditing, marketing? Maybe you can help me with my valuation because, valuation is a difficult thing if you're, pre-rev. Is this something that you'd be able to help me out with at Dalmore?
We're not a law firm, so we could introduce you to a number of different attorneys that specialize in whatever the exemption that you're considering launching through. On the marketing side, yes. Our model on the marketing side has really been to observe what has been working well and not so well for other issuers. And that changes, right? Because we've done so many, we've onboarded close to 300 Reg A offerings. We've had the benefit to really observe many different marketing companies and how they're performing for different types of offerings. And we keep track of all that, the analytics. So we're very frequently asked for those introductions. Yeah, I mean, that's really, we're seeing a lot of our issuers that might start on a marketplace platform. And they were hopeful, I guess, that there'd be more traction amongst some of the users on that platform. But unfortunately, it doesn't always work out so well. And they realize that a lot of their success is really coming from their own investors and their own marketing efforts. And so, we're seeing a trend of that. I think because there's a lot more platforms out there right now. I think there's close to 80 or 90 CF funding platforms. There's only
90 plus.
a handful that, including Howard, that are really doing the majority of the raises. But keep in mind, there's only 1,500 companies or so used Reg CF last year. There's 30 million companies. This is like literally just the beginning. So there's going to be a lot that are going to have an interest in some of the benefits that an existing community has, right? And there's going to be others that have their own customers, fans, followers, subscribers. They might want lower costs. They might want a more direct experience. They might want to have control over their investor base. So I think there's going to be room for a lot of different approaches here. But yes, Dalmore does provide also that one-stop shop for really everything you need, from on the primary issuance to secondary market trading, marketing, and all the different vendors that go along.
Yeah, I'm going to get back to the secondary thing in a second. I want to jump over to Matt here for a second. So you guys do full stack, Reg CF, Reg A plus, Reg D, and I think Reg S too. What about venture money or angels? Do you guys offer that? Because I see in some platforms sometimes where they have a lead investor, or they'll have some sort of partnership with a VC. Is that something that you guys do, or can you comment on that?
Yeah, so we have in a number of cases, actually one I can think of where we did in partnership with the Dalmore group, a robotics company whose lead investor was a VC. And what they did was they took in money from that VC. They had allocated specific use of proceeds for product development, but they also wanted to open it up to the crowd. And it actually worked very well in that, from the VC's perspective, they wanted the validation from the broader general public that this company was producing a product that was, interesting, attractive, was going to, hit the mark in the way that they thought it was going to. And from the crowd's community, from the general retail public's perspective, the fact that a VC had invested is a great reason, especially when people are putting in small amounts of money online using a credit card. They're not taking the sort of due diligence and deep dive on the company's operating history, financials, track record of founders that they know a VC is going to do. And I personally believe that there's a big opportunity to work harmoniously with the VC community. Like, just thinking about Silicon Valley Bank, every tech founder I know used to get an intro from a VC to Silicon Valley Bank, who would say, if a VC funds your company, I'll give you a term sheet for debt, right? That's gone now. So is there an opportunity somewhere else to have a similar type of deal where a bank will say, if you raise equity capital, I'll give you some debt? And where should that equity capital come from? Maybe it can come in part from VCs, but maybe it can come in part from the crowd. And I think there's a synergy that works really well. We never, pitched ourselves, just speaking from DealMaker's perspective, as a disruption to the capital markets, right? I know a lot of technology companies leverage the concept of disruption a lot. Some of it's buzz and some of it's more intentional than that. But from our perspective, we were looking to facilitate the flow of capital. We were looking to unlock the opportunity for investors to find companies they really like, and for companies to find investors that work with them. And so as what's the opposite of disruptors? As facilitators, as a harmonious participant in the space, we see no reason why we can't coexist alongside VC. And I actually think there's good reason to think that it makes a lot of sense for all parties.
You're augmenting the process is what you're doing. So when you engage with a VC, a professional investor or angel, do you do a side by side? Because I see a lot of platforms will do maybe a CF and a Reg D. Is that something that you guys do?
It's up to the issuer. So they'll come to us and they'll say, this is what I want to do. And we'll either be able to facilitate that with the technology or we won't. But we don't prescribe structure. We don't say, oh, you're doing a raise on our platform, this is what it has to look like. You have to open up a sidecar here. You have to use an SPV. You have to use this type of security. We don't do any of that. We're built to be behind the issuer's brand and behind the issuer's strategy. They come to us with what they want to do, and we figure out how to support it.
Okay. Howard, do you guys work with venture money at all, angels or big investors? I know you have Mr. Wonderful out there, touting your site. How do you guys manage that?
Well, I have to say, a company already has VC, and we have plenty of companies who already had VC capital. Fine, they have VC capital. The only issue would be that the VC is usually in preferred position, and they have investor rights. And then you have to figure out, okay, what is the next type of security we're going to offer? So there's some structuring going on. We've seen sometimes the VC is willing to convert to common, sometimes they don't, sometimes they want to issue securities alongside them, sometimes they don't. They have a voice in the matter. So they're important. So you have not only the CEO to deal with, but also the VC or multiple VCs. So the answer is we've seen it, we've done it. Is it the most common way? No. The most common we've seen is companies coming to us to raise capital prior to receiving VC capital. We've seen companies get VC capital after they raise with us. We've seen a lot of different things. I don't think it's one or the other. It could be a mix. But ultimately, our view is that the entrepreneur needs to stay in control. And that is part of our philosophy. So we'd like to see entrepreneurs raise capital from the crowd and stay in control and not give up board seats and give up rights. But sometimes they do. That's a reality of the marketplace.
Okay.
So one other point that I'm not sure everyone always appreciates is that VC, while it occupies a big amount of space in our discourse and our national conversation around capital formation, it's like a tiny corner of the capital markets. Statistically speaking, the U.S. public equity markets are in the T's, right? We're talking about trillions of dollars of capital formation every year. And I think everyone knows for every 100 companies that apply to a VC, the VC turns down 99, right? The rest of those companies still go on and raise. So I think what Howard says is right, and it's important to keep in mind. Like some people go to the VC route, the vast majority of companies don't, and occasionally there's in that Venn diagram like a tiny slice of overlap between those who are VC eligible and those who are more generally suited to the capital markets.
Okay. Yeah. Thank you for sharing that. Howard, I'm going to go back to you for a second. This is a big issue for people who are looking to raise capital. Fees. Now, I know everybody's fees can be different and a little bit nuanced here, but a broker dealer can charge fees differently as opposed to a funding portal. Can you explain that for me so I can understand this?
Yeah, it's strange. It's really strange, Andrew. So the funding portal is not, it's subject to FINRA, which is the regulator supervision, absolutely, like a broker-dealer. However, it is not subject to FINRA's rule, which supervises the entity's compensation. So the compensation that a funding portal is willing to negotiate with the issuer is not privy or needs approval from the regulator. No problem. So they can say, okay, here are my fees, this is what I charge, and that goes well. There is no extra time for review by the regulator. However, with a broker-dealer, they need to review compensation. But with regulation crowdfunding, there's an exemption here, which is great. But with Regulation A, they have to review the compensation, and it's always a mystery as to how it works, this process, but we have to go through it, and it sometimes frustrates our companies because it delays things. But ultimately, the regulator is looking to see if there's a fair, in their view, fair compensation.
So that's what it comes down to, fair compensation when you're a broker-dealer?
Yeah, except they don't, it's fair, what fair means, I don't know. It's their definition of what is fair. Again, it's not clear, it's not published, which is fine, but it's a little bit of a push and pull kind of review side on their side, and we work with it and make it work.
Etan, how do you guys charge issuers? Where do you make your money?
We have an onboarding fee that covers due diligence and some of the expenses that we have at an operations level. And then we charge a percentage of total funds that are raised in the offering. And for Reg A, our fee structure goes down to as low as 1% of total funds raised. And I guess you could compare that to what platforms typically charge, which is usually closer to probably 7% on average, sometimes higher when you add in equity as well. So we've really come up with a really kind of low cost and efficient model that empowers issuers to raise capital on their own domain. But one interesting thing you mentioned before is that there's a regulation CF portal is only allowed to charge commissions on regulation CF offerings, right? So technically they could list a regulation A offering or a regulation D offering on their platform, on their technology, but because they're not a broker dealer, they're not able to charge the issuer a commission for that. They would have to charge them like a flat fee that wasn't based on success. Whereas a broker-dealer can charge a commission for Regulation CF, Regulation A, Regulation D as well. So that's the broker-dealer side. There's also technology fees that go into an offering. So when an issuer is considering a platform, they should make sure they speak with a number of different participants. They should look into both the broker-dealer components of the cost structure, as well as the technology and processing parts of it as well, which can end up being pretty significant.
Matt, do you have anything to add in regards to fees that you would potentially charge to an issuer?
Yeah, so ultimately, I mean, we're as I said, like an a la carte menu. You pay for what you use. The biggest determinant, right? There's a range. You can hear me okay? Mm-hmm. Yeah. There's a range in what issuers end up paying when you add together all of the things Etan's referencing: the technology, the processing costs, the credit card fees charged by the banks, the broker-dealer fees as a percentage of capital raise, the marketing fees if they're going to buy Google Ads. The biggest unknown, and is very specific to who the issuer is and what they're trying to do, is a marketing budget. Like, we've had issuers on our platform spending $1 million a month sometimes on marketing. Wow. One particular raised $67 million over the course of their multiple capital raises. But I think one way we try to help founders think about it is, if you are online capital raising, then you're doing more than just spending money to take in investment dollars. You're building your community. You're building your brand. You're identifying evangelists. It will help you win talent. It will help you with product sales. And so, I think from the traditional capital markets, which was my background before we started this company, it used to be the case that, CEOs and founders would think of their marketing budget over here. I'm willing to spend $10 million a year marketing this company so that I can get traction and get recognition. And my capital raise budget over here, I'm willing to pay a broker, 7% plus warrants to raise me capital. And these are two separate budgets. In the way we see the world, this is all the same thing. This is all about building a community, nourishing the community, engaging the community, and turning that community into a source of capital. Your shareholders can be customers, your customers can be shareholders. And so it's very specific to the company how much it makes sense for them to spend to build that community.
So it's an asset that it's evergreen. You keep tapping into these people to support your product, but also potentially to support future funding rounds, correct?
100%. And it's not just about, once you build a community and that community surrounds your company like an army of people carrying the banner forth into the world, right? Even if you end up going public, you need that base of shareholders who believe in you, who understand you, who have been nurtured by you, who maybe own one of your products, and who are that loyal following for when the volatility of the market causes the price to go up and down, right? Etan and I had another shared client together who was doing a Reg A, but was a publicly listed company. And during the marketing period of that offering, their share price on the OTC actually ended up going up because they were doing the raise and they were reaching new people and they were building buzz, and those people were on Reddit and everybody was talking. And so trading went up, unrelated to the offering, but an ancillary benefit of putting energy into the world and building a community and having that buzz that companies find very valuable.
Okay. All right. Thank you for that. Howard, I had a discussion with you the other day, and one of the things I've learned over the years is that, there's not just one type of broker dealer. There's a lot of nuance there. There's, pieces and parts that you can add onto having a broker dealer with the approval of our regulators, FINRA. Can you share what StartEngine's broker dealer can do today, the different aspects that you can offer via your platform?
Absolutely. So, we started out as what we call an introducing broker dealer. That was back in a few years ago. That means that you can charge commissions for Regulation A, Regulation Crowdfunding, Regulation D, but that's it. You can't touch the customer's money. And then we've upgraded it so that you can actually hold the customer's money like a bank, exactly like a bank. And on behalf of the investors and hold their securities also on behalf of the investors. And there's a lot of benefits from that. One of them is that you have everything in one account, all your securities, and then the issuer has one name on their cap table, which a lot of them like, having one name like StartEngine. And then we manage on behalf of the investors, the securities and the cash. So we have the ability to do that. And then we upgraded another time to be able to do trading as well, an alternative trading system. So we've done several upgrades over the years. Is there more out there? I'm sure there is. That's where we are today.
Okay, so you do trading. So first you have to be a broker-dealer to become an ATS, an alternative trading system.
Right.
I know you guys have been approved to be an ATS or operate an ATS for a long time, and you've been working on this for a long time. And in my opinion, going forward, at some point, this will be a big portion of the securities crowdfunding sector. What are your thoughts on that, Etan?
I agree. The private markets are a lot bigger than the public markets. But when you buy a publicly traded stock, you open up the paper the next day, you see the bid, you see the ask. It's a path to potential liquidity, right? There's no reason why the private market shouldn't operate in a similar way, right? You folks that buy private securities shouldn't just have to wait to see what happens down the road and kind of get dragged along to that outcome. They should have a path to bid on more or to offer their securities to someone else who might want to participate. So I do think that we're going to see a continued increase in the usage of different alternative trading systems, and as a result, more potential liquidity for investors, which is going to be super healthy for the market. Dalmore is not an ATS, but we've been very active as a broker-dealer for secondary market trading in addition to primary issuance. And we do that in conjunction with partnership with a number of different ATSs, all of which you could kind of get done seamlessly through API integrations. We've done over 150,000 secondary market trades, most of which currently are in the fractional share space, the single family homes, the collectible and the art space, not as much in the companies that are looking to raise $20 million, pre-IPO, whatever that might be. But I think we're going to see an increase in it. And I think it was a smart move for StartEngine to be early in pursuing that. Even though we're not seeing a lot of activity today on the secondary, it's going to increase, in my opinion.
It's hard being a pioneer. In my opinion, the three of you are all pioneers in this sector. Matt, I don't think you're going to argue with anything that Etan said. Is the future having fewer platforms as opposed to many platforms where you manage your securities, be they private or public, and other financial services? What's your opinion on this, and what's DealMaker's kind of position on this going forward?
So listen, I'm a delusional founder, right? So I think the future is that all of us are going to do 1,000 times more business tomorrow than we're doing today. I think that it's probably closer to the truth to say we'll be doing 100 times more business, but we can argue about the number. But I remember e-commerce in 2012. I remember, I keep going back to shoes because I remember the shoe company that wanted to sell shoes online, and they had to go to Accenture, who custom built them an e-commerce website. You don't have to do that anymore today, right? Because e-commerce is so well understood as part of the sales ecosystem. If you start a new store today to sell shoes, you're going to do it online. So I think online capital formation will be mainstream. I think every company or a significant proportion of companies who are looking to raise capital will think about their own communities and their own customers as a potential source of capital. And I think, I think the places where buyers will congregate, so, on the portal side or on the marketplace side, will continue to proliferate. And I think they'll probably specialize. You'll have, certain communities that have very specific attributes. You'll have, ESG based communities. You'll have an oil and gas community, and you'll have a carbon community, and you'll have, all sorts of communities who specialize in bringing offerings on those platforms that community is super interested in, because differentiation is a strategy. I mean, that comes straight from Michael Porter. So I think the future is much more mainstream online capital formation, companies turning to its customers as a source of capital, and communities popping up all over the country where they have special attributes. And if you're particularly passionate about a certain theme, you can go to one of these communities and they're curating those offerings for you. That's what I think.
Yeah, I think that's an interesting perspective. I do think that providing secondary transactions is a key component going forward. Life changes. Typically when you buy a private security, they're very, very illiquid. And I think enabling secondary transactions is a good deal for both sides, both the seller and the buyer. That way you don't have to pay for a public offering or a merger or acquisition, and it's going to happen just very early days. So I'm going to ask a couple current questions before we jump over to the Q&A from our audience. I kind of wanted to get an update on current market status in regards to private securities, while reflecting on the volatility and the ongoing bank crisis we're experiencing right now. I've spoken to you guys, all three of you, recently. I kind of have an idea, but I think it'd be interesting for our audience to hear what you're seeing in the market in reflecting on the challenges that exist today. And I'm going to start with you, Howard. What are you seeing at StartEngine? What type of activity are you seeing? Are you seeing more issuers, less? Are you looking to provide capital to these companies that are in need and can't raise venture right now because that market's dried up? What are you seeing today, Howard?
Well, I'll tell you what, we're seeing a lot of people frustrated with the venture capital system because they're not getting the capital need, or very, very frankly, the VCs decide to stop investing in them. And so, when a VC will say, hey, I'm not going to co-invest in the next round, you're pretty much done with that VC route, and because another VC won't come in. So it's very frustrating. The banking system, what happened with SVB over the weekend, a lot of our issuers had money with SVB. It's insane. It was an insane situation. It was surreal. The government had to step in. People got their money back. It is so strange. I'm telling you, it's hard to explain it. But what it did reinforce is that companies need capital. They need capital to operate, and they need capital to raise to be able to continue their growth or survive. And we provide that. So we're very happy to be the company that will talk to them and see if there's a good fit. If there's a good fit, put them on our platform, etc. I see a lot of demand for capital. I don't think that's a surprise to anyone. The VCs, yes, they are a small market, but they are a very important market, and they do their job very well in some instances. Okay, but that's not the market. The market is enormous, and so we provide also a small part in the market, and we'd like to grow it. We'd like to see it grow further. We'll see how the market adapts over time. We're long-term players. We're patient, and we'll see. We'll see how it goes.
Etan, every time I talk to you, you share your pipeline, which just seems to get bigger and bigger. How's your pipeline look today? What are you hearing from the marketplace? What are issuers telling you? What are investors telling you? What do you see today?
It continues to increase, both on the the Reg A side, the Reg CF side, the Reg D side. I think that we're seeing an increase, I guess, I don't know if sophistication is the right word, but issuers who are more prepared, who are better funded, who have more experience, who are approaching this with the right expectations. I think we're seeing that as the industry is maturing more. In particular, we're seeing issuers who are launching platforms. Some of them are focused on not just raising capital for a startup venture, but for offering kind of what I call yield-based offerings like REITs or royalties. So it's not just about investing in a company you think might become the next big thing. It's also about positioning yourself to have access to a higher yield than you might be making in your checking account at your bank. right? So we're seeing a lot of growth in those communities as well. And also in the fractional share platforms, what we call, the series issuers, right? Not just doing a one and done capital raise, but building a community and giving their investors the chance to participate in an ongoing number of individual investments, whether that's single family homes or collectibles or racehorses or sports cars or franchises or music royalties. That's a really big area of growth that we're seeing. We have about 60 of those clients out of the 290 or so Reg A issuers. So I think that's going to continue to increase.
You recently mentioned that you have like an income offering. It's kind of like a bond.
Yeah.
And I would think that there'd be a certain amount of appeal with a security like that right now, where if you bank at JP Morgan Chase, you get like a negative return on your money. So I would think there'd be a lot of interest in that from certain investors.
Yeah, especially as you once the platform has been around long enough, and once the platform is returning capital to investors over time, then if you have the right UI and UX, and you make it really easy for investors to reinvest their proceeds, these platforms could grow and they could become very significant. The one I was talking about, the bond, the offering, they're on their fourth Reg A. They've been at this for a while. They sold out 350 million Reg A's. They're on their fourth now. It's a $75 million offering. And they've already sold out about 25 million of that in a month and a half, I think.
Okay, thank you. Matt, boots on the ground. What are you seeing?
Yep. Same as Etan. There's no slowdown. I mean, Monogram just finished a CF. They raised $1 million in like a week. So
what type of issuer was that? Monogram? What type of company?
That was a CF.
No, I mean
they're an orthopedics company, robotics innovation, with a medical application.
Yeah, that's interesting. A week.
Think robots that can do knee surgery, but same as Etan, I think similar to what Howard is seeing, there is a shift underway from traditional capital raising, from traditional forms of finding investors to online capital raising. That trend continues. The uncertainty over the past week hasn't materially, thrown our pipeline off in any way. That's any, major disruption from the, broader headwinds from over the last, 7-8 months. So we're seeing a continued shift from traditional capital raising to online capital raising. We're seeing deals continue to perform well, especially amongst brands who have laid the groundwork and made that investment in building their community and aren't showing up one day before they need capital to say, I really need capital. If you lay the groundwork, and if you're open and transparent with your prospective investors, and you give them updates on how the company is doing, and they follow the company over a period of time, then incremental uncertainty in the capital markets doesn't seem to have an impact on the decision of whether or not to buy, because you've done the homework and you've done the prep work and you've given them reason to trust you. And so, companies who have done that well, which is the fruits of, labors that were laid maybe 12 or 14 months ago, they're continuing to harvest those now. Companies who haven't done that well, they probably weren't going to perform super well regardless of the, macro environment.
Okay. All right. Thanks for that. Howard, you actually had a CF offering that raised, I think it was like 3 million really quickly, like a couple of weeks. It's Fiber Logics or something like that. I saw that on StartEngine. It had a pretty banging success there in raising money on your site. So I'm going to jump to questions now because we've got a few more minutes. We have a lot of questions in the queue here. Since I'm talking to you, Howard, I'm going to ask you very quickly. Can you give me just a ballpark, a round figure? I don't think anybody needs to hold you to this. What does it cost to get started on your platform for a CF or an A+ securities offering? Maybe you can kind of give an estimate on that.
Right. Well, we charge a commission, nothing upfront. So our commission is 5.5% plus some stock as well as in lieu of cash. And there is no upfront cost from our perspective. The upfront cost is really the legal, the accounting, CPA person costs that are borne by the company, and then we also have a fee, a one-time fee as well, that we charge for the issuer once they are successful. So should they raise no money, we lose our time and efforts on the deal, and that's how we've structured it.
Okay. Here's a question for you, Etan. How do you approach due diligence when you work with an issuer? What do you have to consider when reviewing the offering opportunity?
That's a very serious component of what we all do. There's obviously bad actor checks, background checks on the issuing entity and on the officers and directors. On the CF side, we actually partner with a pretty well-known law firm that assists us in the diligence and the fact checking, and produces a diligence report in addition to the diligence that we do. So we try to be very conservative with the due diligence that we do on that side. It's ongoing. There's diligence on the issuer. There's diligence on every investor, right? So, as a broker dealer, we're overseeing each investor to make sure that we do the KYC, the know your customer, the anti-money laundering, OFAC checks, suitability requirements, advertising and promotional material review. So that's when you have a situation, an exemption that allows for any investor over 18, whether they're accredited or not, or I don't like the word sophisticated in this case, but they consider new investors that are approaching this for the first time. A lot of their decisioning might be made based on what they're seeing being marketed to them. So I think the role of the regulated entity is just to make sure there's no bad actors and to make sure things are presented in a fair and transparent way.
Yeah, I'd like to mention that all three of you are regulated by FINRA, and FINRA is a very serious organization. They don't mess around, and they're probably on all your platforms all the time. And if they have questions or inquiries about anything, they don't hesitate to reach out. So it's a highly regulated business, a highly regulated industry, as it should be. Matt, so for investors that are coming to put money, via a securities offering that you guys CF or plus, how do you qualify to investor?
Can you say one more time?
Yeah, how are you qualifying?
Kind of cut it in and out.
How are you qualifying potential investors that come to your issuers? This is a question from the audience.
Yeah, so we're not doing that. We are not acting as a double-sided marketplace. We are not matching investors with issuers, and we're not making sure that investors come in are, suitable for that, particular security. What we're doing is powering the issuer's offering to the public. The issuer is running a self-hosted raise. The issuer is selling shares the same way they'd be selling shoes. Maybe think of it like, the way Shopify works. When we do the Green Bay Packers common stock offering, the buyer's coming and buying direct from the Green Bay Packers. Yes, our technology is making that happen, but they are engaging in a transaction directly with that issuer. They're not buying from us, and we're not telling them whether they should or shouldn't buy. And so the type of, I just want to be very clear, when an issuer goes out to find its own investors doing a self-hosted raise, it's got to make sure that the investors who come in are suitable for it. It has its own responsibility around where money comes from when it accepts money. I mean, everybody across the country who takes money and has to know where it comes from. So that's AML. We can advise because we operate a technology that runs searches on people and will green light or yellow light or red light if people show up on watch lists or, their identities don't match the information that they've put into the subscription agreement. And then the issuer can either, investigate further or can ask us as a broker dealer to assist. But ultimately, the choice to make a purchase or not is up to the individual investor. No one on our team is recommending securities. No one on our team is selling securities. The issuer does its own outreach. We may help provide services in helping them tell their story a certain way, but any dialogue between an investor and the company about what the company's business plan or whether it's their own investment. I don't remember who it was, maybe it was Howard, but somebody was saying you buy from the CEO, you don't buy from a broker dealer. We stand behind that 100%.
Yeah.
You have to front of what you're selling as a CEO, and you're the ultimate face of the company, not us.
Yeah, I think this is a job for any CEO in any company. You're like the lead salesperson. Howard, this is kind of a tough question. I'm gonna toss it to you here. When you invest in a CF offering, are these offerings in general investor friendly, issuer friendly, fair? Do you think that there's room for improvement in that space? And I know this is hard because, you know, in my opinion, a securities offering has to work for all three aspects of the transaction. The issuer needs to raise the money they need to grow to get to the next level. The investor needs to have a reasonable expectation to generate return. Granted, you know, early stage is very risky, and the platform has to make money to survive. What are your thoughts on that, Howard?
Well, I think you're right. This is a three-sided marketplace, and we have to take good care of making sure that it's aligned well. On the other hand, our job ultimately, as a portal, if you want to talk about regulation crowdfunding, is to make the offering available to investors. We do do a lot of work on investors. We look at the suitability for, if it's a Regulation A, we're required to do suitability. If it's a regulation crowdfunding, you don't have to do suitability, but if you look at the limits, the investment limits across the entire platform. So we have to do a lot of checking. We have to review the investors. We have to get more documents from the investors. We've automated a lot of it, but still, it requires a lot of attention from our part. And all of these things are part of the regulations that are put in place by the SEC. And, you know, I think a lot of people have seen what happened with the banks, and they can ask questions about broker-dealers like ourselves. What are we doing to protect investors and their capital? And so those rules are well laid out, and we follow them. We have to make sure that we've checked all the boxes. It is complicated, Andrew, and that's part of the issue of how you're going to grow this industry is to automate as much as you can so the costs go down and it's more available. Capital is available to everyone, and that's not always the case. I got into this business because I wanted to help entrepreneurs. So that's my angle. And at the end of the day, the investors have to also have an outcome. And until we solve this secondary market liquidity, I think it's hard to talk about true returns, because on that you have to wait for the company to be sold or them to go public. And that's not always easy too. Today, if you look at the marketplace for capital today, it's hard. It's really, really hard. It's basically two things. There's the ones who they can get VC or they can go public, and the ones who can't. And the vast majority are the can't. And so what are they supposed to do when they need capital? And that's where we and Dalmore and DealMaker, we come in to provide means to getting the capital. And that's how it is. I would like to see growth. I'd like to see more regulation when it comes to secondary opportunities. I would like to see more, and I know there are discussions for that. It's just we're just at the beginning.
We're just at the beginning.
Very early stage.
Okay, last question to Etan. This is a good question. If you're based in the EU, can you come to the United States and raise money on your platform?
If you're in order to qualify for Reg A, raising capital through Reg A, you need to be a U.S. or Canadian-based issuing entity. And if you want to raise capital through Reg CF, you need to be a US-based issuing entity. So if you're an international company, you can't just set up a shell here for the purpose of using this exemption. You have to be a legitimate business operation here. And it's a bit nuanced as far as how do you make that determination, you know, as far as there being an actual presence here, portion of the funds being used here, employees here, et cetera, that Securities Council could advise, you know, better than I can in that regard. But there are international companies that go through the process of setting up things properly and compliantly so that they can raise capital in the US for the entity that they set up.
Okay. All right. We're way over time, more than 10 minutes over our allotted period. So I'm going to end this now. First of all, I want to thank everybody who came to attend this webinar today to learn about raising capital online, learning about whether you should choose a broker-dealer or a funding portal, as well as other aspects of pursuing an online capital formation funding round. I want to thank Etan, Matt, and Howard for spending some time with us today and sharing your expertise. And I'm certain we're going to see all of you again in the very near future. And please join us in our next webinar. So thank you, everybody, for coming today.
Thanks so much.
Take care, guys.